usual.
Hey, I'm Brittany.
I'm Nicole.
And we're Those Girls. Welcome to episode 30 of our podcast. Today we have Craig Good with Dovetail Mortgage. Hi, Craig.
How are you?
Good. How are you?
Thanks for having me.
Anytime. Thanks for joining us.
Cool stuff.
Yeah, we're excited to have you. So we were just telling a funny story off camera, so I think we'll start with that to just like break the ice.
Yeah, so I haven't been out here for a little while.
Where are you located? Let's start with that.
Okay, so Dovetail Mortgage is in Braintree, Massachusetts, right at the split,
Awesome.
where right near where Hyatt and Legal Seafoods is. So,
Okay.
Awesome.
yeah, so this is my second career. In one of my first careers, I was like 18, 19 years old. And my cousin, Danny, who...
that's how we met. We'll talk about that after.
Had a Christmas tree lot over there. And, he used to open and I used to close. And on one night on the way home, I was sitting at a red light and very tired from lugging trees around and whatnot. And I was sitting at the red light and I thought the light turned green, but it wasn't my light that turned green. It was the oncoming traffic.
It's like the worst feeling too.
Yeah.
I've done it just like not gone through, but just like started to go and you're like, it's almost like when you go through a stoplight. Stop sign.
At that stage of the game, I was fully committed to going through the red light. So, having said that, I hit the guy this way and it was a big thing and whatnot. And as soon as I looked in the rearview mirror, of course, there was a police guy right behind me. So
of course,
that was cool. So we had a little accident, went over, did the paper exchange and whatnot. And then I got cited for, failure to stop at a red light, even though I was already stopped.
You stopped, you just went through it.
At some point I went through it. And the funny part about that story is that the police officer actually kind of came by the Christmas tree lot one time. And I said to him, hey, I would really like to get out from underneath that ticket. My insurance is already like step 75 already. And he was like, well, we'll see what we could do. And I was just like, do you want his Christmas tree? And so anyways, he agreed and graciously took the Christmas tree. And here comes court day, like 30 days later when I'm supposed to appeal the ticket. And he's a no-show. So
isn't that's good though, right?
Christmas tree, Andy was a no-show.
No, because if they no-show, isn't it automatically over?
One would think, except I was sitting there like getting,
that's what I thought.
I was sitting there, basically appealing to get the ticket removed.
Like, do I need to bring another tree? What do I need to do here?
Well,
right.
But you can't throw him under the bus.
No, no, I did throw him under the bus. I was like this. I was like, when it wasn't going my way, I was like, hey, I just want to let everybody know
payment.
This is supposed to be taken care of. I gave him a Christmas tree. I mean,
they're like, sir, this is not a bartering system.
Right. Yeah. The judge is like,
whoa, cut the record, cut the cut step. Can you approach the bench, please?
Are you going to give me a Christmas tree now? How are we doing?
He didn't hold me over a barrel, but it was funny story is that it got continued. And then I got a phone call at my house saying, you really probably shouldn't have done that. But,
that's awesome.
You're all set. You're all set.
So that's funny for me because I'll tell everyone how we met. I kind of do that. We do that with guests. So I knew your cousin, right?
Mm-hmm.
I won't say his name, but I worked at.
Did.
Oh, did you already?
I said my cousin Danny.
Yeah, right. We know Danny.
Yeah, we know Danny.
I don't know Danny, but
for two things. First of all, what you did with the police officer is a very Danny thing to do. Because I know him more.
He was an impressionable older cousin. That's what we do. We pick forgiveness.
So he was my bar customer for 10 years when I worked at a restaurant. And one of my, the brothers, all of them, we won't say their name, but they're all very charismatic, very known in town. They're all wicked nice people. They're great.
For sure.
They were my favorite customers. But Danny would really kind of like get my gears going when it was Christmas tree season.
Oh,
because he'd come in with like a big beard and like a flannel on and he'd smell like Christmas trees. And he'd come in and have his chicken parm and his drink. And I would just go over and I'd be like, can I sniff you? So that was like always our little flirtatious joke. Because
we're gonna clip that part out. No, that's gonna be our weekly.
That's our real.
Can I sniff you?
Literally, I would like lean across the bar,
tell me
and he
more.
would like open up his like little flannel a little bit. It was like a whole thing.
And it wasn't the flannel; it was actually his hand.
Yeah, right. But no, that's my Danny thing. Was always I would always be like, it's Christmas tree season. Danny's gonna come in.
Him and his smell.
Oh, it's the best.
Yeah. That's a funny story.
But anyway, so that's my Christmas tree relation with Danny.
He's actually very, very famous for introducing me to a slew of people. So I'm just blessed and honored to be on your podcast today.
Oh my God.
courtesy of
Isn't
my
the world
cousin.
like so full circle? Because I'm
Yeah,
sure
for
I
sure.
met you at the restaurant a bunch of times.
Amen.
Yeah.
Because I was a South Shore guy too.
But yeah.
Lived in Hanover for a bit.
So just a quick question.
Yeah.
Does Danny let everyone sniff him?
I like to
only
think
certain
it's special.
people, Brittany, only certain people.
So when your
So,
cousin
yeah,
isn't allowing,
It's a selected audience.
so
I haven't sniffed them. Ever. It was out of bounds.
I'm special. Do not ruin this for me.
well,
All right,
everyone wants to sniff him now, I guess. So
Oh.
And I know
mortgages.
exactly where I'm coming this Christmas after Christmas tree delivery.
So
Yeah.
you sold Christmas trees.
I
Now you
did.
sell mortgages.
Yes,
How
so-
did you make the transition?
Okay, let me, 30
Yeah, you have
second
a good story.
infomercial on me.
Yeah.
Right?
You have a really great story.
So in 1992, by accident, I came out of the business that we were in. That was a family business. And, I was kind of looking for something a little different and, try to apply. Honestly, it's a hard working man's business, what they do. And I was
Yeah.
trying to a little bit more apply my brain and my personality to be able to, kind of make ends meet. So I started studying for my Series 6 and 63, which is to be able to sell mutual funds. This was back when Fidelity really started up
Okay.
with mutual funds and they became, super popular. And I was like wildly unsuccessful in the practice test, but I was kind of grinding, I was doing the data input side of the company. I was working for my stepdad's company in Quincy. And the rates are like just really settled down. It was like, honestly, 1992 was when I first got into business. The rates were 10%, 11%.
So it's like full circle for you right now.
Right now, yeah, we're creeping up to 8.
This week,
yeah,
this
creeping
week
up to
has
8.
been yesterday. I called her. I was like, I just saw an 8 on the rate sheet. I've never
the
seen
eight's-
that
eight's
before.
on the rate sheet, for sure. So, anyways, his investment advisory firm, he had a lot of clients that would call, and the phone was ringing off the hook. And I was like, why is everybody calling? And they said, oh, they're looking for a referral for a mortgage because they're going to refinance their mortgage. I'm like, what's a mortgage? So 1992, January of I'm like, what's a mortgage?
So what were you like in your 20s?
I was 22. Yeah.
Damn.
So,
Yeah.
really early time to get into the mortgage game for sure, because, it takes a lot of like fundamental and understanding until like what it is, what a mortgage really is.
Mhm.
And good story. The first client that I had was in Hull. All right. On
nice.
Atlantic Ave. So that's kind of ironic that
we were just
we're
talking about
talking
that.
that off camera. And it was my grandparents' best friends, Claire and Red, something or
That's
other.
awesome.
Yeah.
And we refinanced them for like $100,000
my God.
refinance, and they were going to save like maybe $200 a month. And for an elderly couple, it was like, there's a
Even
lot of
now,
money back then. Yeah. So good story about that too is that as a first loan, kind of process, I thought I screwed it all up. I didn't know the difference between no points and no points, no closing.
Yeah.
I still
And
won't
then-
know that.
Well, I can share with you after my 22nd birthday, I figured that stuff out. So the way it worked is that, the closing costs were built into the loan.
Yep.
But I thought that the closing costs had to be paid for by the rate. Right. So, and I was like
interesting.
panicking, right? Oh my God, I can't screw my grandparents' best friend on my first
Right.
deal. I'm sitting there having a wicked tough time.
And
for
I would
myself.
say like my first year, I had those moments on every single loan. I was like,
yeah.
did I completely F this entire thing up and I didn't realize?
Well, and again, I really honestly, I was in an investment advisory firm, so I didn't have a ton of leadership on the ins and outs. I had a global understanding of what mortgages were at that point. So I was delighted to know that when you finance the closing cost it was just 0 points.
Yes.
And so my first commission that I ever got was somewhere like $1,600. And for a 22-year-old kid, that was like striking it rich. And hit the lotto.
Okay,
right?
so when I started though, I was 36, and my first commission, I was like, "This is a lot of money."
Yeah.
Like, because you get it all in one chunk instead of getting
Yeah.
paid out over weeks, and it just
Correct.
feels so much better.
Yeah. So I quickly kind of acclimated to mortgaging because I really understood the concept. I'm a math guy, and I understood the way to communicate to people, the opportunities of a refinance. I never did a purchase until like 3 years into it because it was just refi.
Oh.
My first
Rates
year, I
went
did
from
10 refis.
to 9 to 8 to
Mhm.
7. And before, there was these net tangible benefits, right? We would take this, kind of pocket of business and we would do no points, no closing costs with them. And they were $500,000 loans. So every time the rate went down a quarter, it would work. And so I had a contact out in California at Countrywide Funding. They had what they call direct line processing. So they would process the loan. And there was a young lady out there that fell in love with me over the phone, and she would process.
Do you have
my
a good
loan,
phone
and
voice?
At the time I did, Nicole. At the time I did. Over the years it's
You'll let you
matured.
sniff him later.
A phone voice is different. I don't even have to see him.
Interesting story, because how it all parlays is that the young lady, she would like pick up the file and she would clear it to close like as soon as she got it.
Just because she liked you?
Maybe.
It's a relationship business. It's a relationship business.
People, we always say people work with who they like.
Yeah, relationships are currency, and I found out this very, very quickly. So interesting.
I like that. Relationships
That's
are
the
currency.
second time I've heard that.
I've never heard that, and I love it.
So I believe that more now than ever before, because when you're young in the business, you don't recognize what a relationship really quantifies in, because you're on first generation transactions.
Yeah.
But remember, I said that was my grandparents' friend. That was my first loan. And subsequently, they referred me to their daughter, their son-in-law.
Long game.
And then, you know what? And then I recently have looked at a loan for their grandchild.
Oh, that's awesome.
And that is super cool, because you know what that says? It's very validating. I mean, this business will really rock you to the core as hard as it is, right? So when you have those repeat customer opportunities, it's fantastic. Fantastic. So 1995, though, you know what? I was in a business where I didn't have a lot of leadership. In the first 3 years, I was running the mortgage company, and we were doing very well. We got through our first successful couple of audits like that, right? Met a great friend out of that process too, because a division of banks guy came in, and he was just awesome to work with, and established a really good friendship with him. And to this day, I'm a basketball referee as well, and he's one of my basketball assigners. So
that's awesome.
It is pretty cool. Again, the relationships as currency piece is huge. So fast forward in 1995, I felt like I could do it better and different, and kind of had a parting of the ways with the stepdad, which at that time it was like kind of a little bit more venomous, right? So had to move.
Family's always
move. Yeah,
family's hard,
especially hard to work.
Had to move. Didn't want to move. But I established this company called Mortgage Results, and we opened up in 115 Lincoln Place in Hingham. And my first mortgage brokerage under my own name. This was the way it worked. I stole the fax machine from the family company.
You gotta make it work.
I called at the time, I think it was like New England Telephone. Right?
Yep.
And I said I need to set up a number in their name. All right.
Oh, I see what you're doing.
Set it up. And then, because the venomous part, if you will, was, my stepdad and I, we had a misunderstanding about a check that was supposed to be paid to me. And I was sitting there with this check. It wasn't good. And I was like, what do I do with this? And at the time I was dating a girl that ultimately I married for a very short period of time. That's another podcast. But so the way it worked is that I walked into, I'll never forget, Karen McArdle. I don't know the name of her company. I remember her. And I said to her, I'm a mortgage guy, talented. I don't have any money, and I need a spot. And she was like, you can take that room right over.
She's like,
there.
let me hear your phone.
So
voice.
was she
I'll
snip you, and then I need to hear your
phone
voice.
voice.
So, like it was at the time, it was like a Regis of sorts. Like they
yeah.
were offices,
Okay.
that were like, small time startup professionals,
Yeah,
or
almost like a
people that-
WeWork or something like that now,
yeah.
co-working space.
As I'm talking about this, I mean, I think I could go on for days about the story about just that address, because anyway, she really vouched for me, and she let me pay later. And it was super, Karen McArdle. I'll never forget.
Because you won't, because she helped you. Yeah.
Yeah, because you know what? And she believed in me.
When no one else did.
And we had a conversation last night. As a matter of fact, a young loan originator, 23 years old, and we're just helping him cut his teeth right now. And so his first girlfriend's mother is like a successful realtor.
Okay.
So we go have a coffee sit at Sorrel in Charlestown.
Oh, nice.
Right, with her yesterday. And he looks across the table and he says, you're the first person that believed in me. And immediately Karen McArdle came to my mind saying, you'll never forget the people that believe in you.
100%.
So now what I have to do, fast forward, we just opened up another mortgage brokerage after a pretty good, storied mortgage career up to 2007. I had 5 state licenses for Mortgage Results. I had like 8 offices and stuff. And I just felt my belly said that business is going to shift. It's going to shift big. And I got great intuition. I've always followed it. And lo and behold, I did. And I was fortunate enough to be, part of the family that the business that I had kind of stepped away from at 18. And I went in the city and opened up a couple of open air markets.
There you go. Okay.
Vest on, and you know what? Downtown Crossing, we started a Christmas tree lot. And that was a whole another episode because I was selling all these like small things, like little wreaths and little baskets and little everything, right? But I had these big trees that were all lined up, and people were just like, nice trees.
Because in the city,
they don't have the...
So you have the adaptive performance. You know, I'm like this. I was like, got a sign. We deliver. Started writing tickets like you wouldn't believe.
They just couldn't take them right then.
They couldn't take them.
Yeah.
But they would buy them, and I would deliver them at night, and you know, I button up the tent, and it was
a lot.
Incredible experience because when you know what I overshadowed was the highlights of the first run in mortgages. You know, in 2004, 5, 6. I mean, we were generating $5-6 million a year, and believe me, I tested the limits of tax code with that all day, every day. You know, season tickets to the Celtics, season tickets to the Heat. I didn't even live in Miami, but I had season tickets to the Heat. So I had to get an apartment down there. All of this was...
That's very elaborate.
Yeah. It's also outside the statute of limitations, so I'm comfortable talking about it.
The industry, you know, so it's so interesting how it evolves and how it changes. And I feel like we're going through some of that innovation and that change now.
Big time.
You know, we're seeing interest rates explode, we're seeing prices of homes explode, and we're seeing, you know, income's not rate going up as much as all of the other things are.
There's a big gap.
There's a huge gap. But what are you seeing as pros and as cons from, you know, kind of where you started to where you are now in the industry?
Well, I think every like 7 years is a complete shift and a radical shift in the way the business is done. I mean, I've been through like almost 5 disruptions at this point, right? So, you know, whether it be the most recent one was COVID, previous to that it was the financial collapse, and you know, prior to that it was the subprime collapse, which nobody really remembers because that happened, you know, way before the financial collapse, right? So what I see now though is that technology and how it's entered into our business is adding a phenomenal positive impact to the process of underwriting and closing a loan. So we have a lot of AI that's available to us through some of our technologies that the lending platform that we're partners with, they give us that underwriting authority where as long as we check a lot of the check boxes, not like desktop underwriter or but like we have to check the check boxes, and then we have to make sure that the pay stubs line up with the dates and all that stuff. And once that basically checks out.
Oh, it's the pre-underwriting with, I know what you're talking about, UWM.
The computer does all of the...
They do it for you. Yeah, it's pretty cool.
So it's kind of like a plug and play type system. If you're
becoming, you know, it's not a perfect science yet, but it's actually, you know, where the industry is going. And I think that now that we recognize that appraisers are in like jeopardy, right? Appraisals are coming, most of them are automated now. And they're only really using an appraisal to take that automated appraisal and make sense
confirm
of
it.
Right.
Yeah, confirm it or whatnot. And I'm seeing like, you know, like from a product standpoint, you know, back in the day when rates weren't high and prices weren't high, you never had to worry about like 2-1 buy downs. They were just this thing on a rate sheet that you're like, yeah, anyway.
Yeah, they were there, they existed, but they weren't something that.
But they are absolutely uber critical right now. And I'll tell you the reason why.
They've been everything this year for me to keep deals.
Yeah. And for 2 reasons right now. I mean, because, you know, when we're as a broker, when we're selling a loan, you know, to that lender, there's this window of EPO, they call them EPOs, early payoffs. And those buy downs, number one, now remember the loans qualifying on the note rates that are available today, but they have like a discounted, you know, slightly discounted for the second year and incredibly discounted for the first year. Those payments are like kind of more comfortable for these people as they're like, and I admire people that are buying houses right now.
Oh, yeah.
I mean,
and they're still doing it. Yeah.
Kudos, because I look at it like, geez, if this was my era, I probably would not be, you know, as aggressive as some of these folks are. So I admire them. I really do, you know, and kudos to them. But the 2-1 buy down is a big deal because if you have rates that are expected to precipitously drop in the next couple of months, right, or a couple of quarters, I think is better said, the opportunity for EPOs is mitigated because they're actually sitting at a rate that doesn't really warrant a big change. Then they can kind of wait for that change. And what'll end up happening is that we're able to, you know, get them outside that EPO window and then potentially refinance them to those better rates, which is, it's almost imminent. The reason why I think rates are imminent is not because I have some crystal ball, but because of the fact that the way loans are priced, and you only really kind of get this understanding when you're like deep, like 3 decades in, the way loans are priced is you don't hear a lot of no points, no closing cost loans anymore.
Yeah, no,
Right.
No points like
And
doesn't
the reason
exist.
for that is that there isn't a lot of what they call above par premium. Above par premium used to be what you use to pay the closing costs in that magic trick, right?
Sure.
But there isn't any of that offered, which means that the people that are offering loans, like the companies that are offering loans, they believe rates are coming down as well. And then as we enter into an election year, I think the history will show that in election years, rates kind of come down a little bit because it's a popular political topic. And I think that, once they really kind of, once the inflation piece kind of figures itself ultimately.
Is it going to? Please let it figure itself out. I'm so over.
Yeah, I mean, I think so, but I do think that, the more, again, without getting political, the more that we help other countries instead of our own, and the more that we're, this was a big week for us, because if the government, maintains and stays open, it's going to be at the cost of the, future taxpayers.
Yeah.
And so that's inflation in and of itself, right? So, and then, one of the biggest inflation pieces that I think is not talked about is that when rates were 2% and 3%, 3% and 4%, what that did is that jacked up affordability.
Right.
And then it really, the sale prices started to skyrocket. And even though they're appraisable, that was a period of time when prices were up, but value wasn't.
Right.
And so we're still in that stuck market where prices are high and rates are high. So I think that something's got to give. What goes up must come down. And I do think it's healthy for the market to go through what we're doing, because here's the thing, realtors, there's a lot of them that are exiting the business or primarily focusing on the job that they had and not really having that second job, right?
Right.
And loan officers, and this is where I give you a tremendous amount of kudos. It's tough out there.
It's tough.
And loan officers, are having a tough time making it work. And in that process, they're saying, geez, I got to go do something different. And so we're seeing an exit from the business for a lot of realtors and mortgage people. And what we're going to see, and like I said, I believe that this is happening. I don't have a crystal ball, but when we see rates go down and whatnot, I think you're going to see a drive to have people that are stuck in, you're dealing with it, I'm sure, a lot, where you sign and say, well, why don't you sell your house? And they're like, well, no, because I got a 4% loan.
Right.
Where am I going with that? What am I going to do? So when those things become more like 5%, 5.5%, you're going to see a little bit more of a movement in that area, which is going to go ahead. I'm sorry.
It's fine. And I love the thought process, and we all want that thought process.
Yeah.
And we do, from my end as an agent, I agree. If we can get interest rates to come down, I think even in the 6s, I don't think we have to go all the way down to the 4s or the 5s. I think
agree.
if we can get it into the 6s,
I agree.
Which I think is attainable over the next 12 months, God willing.
Yeah.
But the issue we're going to have here is that we still don't have enough housing. So those sellers that we're literally knocking on doors right now going, please sell, please sell, please sell. You've lived here. Grandma and grandpa's, best friend who, they don't want to keep up the house much longer, but where are they going to go? Unfortunately, when we see those rates go down, we don't have the housing. So those prices are going to be so inflated again.
Well, the hope is in that space is those people that are motivated to now sell because they can go buy something else in the 5s or 6s. Right. So I think there's going to be a bigger pocket. The industry experts say that there's going to be a surplus of, not a surplus, but an increasing amount of inventory to be able to sell, because people aren't going to be stuck in that low rate, not the right house situation.
Pre-COVID.
Yeah.
So, and I'm kind of like you, I have a really good intuition of the market, and I got into the business very early on in my life. I think I was 19 when it fell into my lap, unfortunately.
It's cool,
as much as I love it.
Yeah.
But
it's a gift and a curse.
It is. And there were a lot of learning curves for me, and I still learn every day. But, I had a really good intuition of where prices were going to sell, what the market was going to do, things like that. And people from other companies would call and they'd be like, hey, can you just go take a tour? Can you give me a price? Can you whatever? And so when COVID happened, we all thought, X, Y, and Z was going to happen. It didn't, prices inflated, all of these things. And it's still really hard to kind of see where prices are going to fall even today with homes that are on the market, because we still see those pockets. Yeah. But I lost my train of thought. First time in the episode. That happens a lot. So pre-COVID, so we're going back to 2017, 2018, even into 2019. So in Massachusetts, we were sitting at about 19 to 20,000 homes statewide on the market.
Yep.
This month in September, we sit at only 3,000. So even if we see that influx of inventory, we don't have enough to, you know, then again, with the housing shortage of people not building as much, all of the regulations around building, those types of things. So for my part of the industry, it's really tough, and we don't see that really breaking. I think until we actually have like another severe financial crisis, or unfortunately a tragedy within the country, to kind of fix that.
Well, you can buckle up. I mean, those are going to be, you know, those are going to be ongoing. I think that those, you know, tragedies, or, you know, I call them disruptions, because they're a reason, you know, to have everything shake, because then monetary policy is kind of, they drop the rates and they just try to like get everybody spinning out of it. Right. And so, you know, that is going to be, it's the time for the adaptive performance in Massachusetts. Remember, we're licensed in 5 states. So I do have a little bit more perspective. Massachusetts is ramped in terms of like what you're saying. I 100% agree with you. We are seeing markets emerge though in a way that's really super cool, because we can shift our focus a little bit. You know, we're licensed in 5 states. I'm very, very
Which 5 states are you licensed in?
So Massachusetts, Maine, New Hampshire, and Rhode Island, and also Florida.
Okay.
Florida's my kind of pioneer.
Still hanging out in Miami with the heat?
No, not at all. As a matter of fact, I've been there and I've done that. I've stayed at the Shore Club, and I've tried to hobnob with all those guys. At the end of the day,
that's a good lead in. Yeah. So what do you do non-mortgage for fun? I feel like you're like out and about a lot. I don't know. Social media can be alive, but I feel like you live in a pretty fun life sometimes.
So I have one of those lives where if I really was, my real life is actually better than my Instagram life. So I appreciate the fact that
that's awesome. Not many people can say that.
Well, so you know what I'm going to tell you, in the social media world that we're living in, that's also not a good thing to publish.
Right.
People start, I mean, like really, they hate on people that are like hitting the ball, like
enjoying their life.
Well, you know what? Maybe just like have hit that crest, right? So, you know, brief story. We talked about the Hull house that, you know, I bought a cottage in Hull, and it was, you know, the plan was to be around and, you know, see it to like a 2-story looking out over the bay and all that stuff. And I quickly realized I'm not a contractor. It happened in COVID, right? So contractors, if you remember, they were like, I remember one company gave me a $15,000 estimate to draw plans up.
Oh yeah.
And, you know, and they also wanted to charge me $500 to come visit the place.
Yeah.
And I took it. I was like, must be a good company if you know, you get what you pay for.
Yeah. And
then I realized, you know, like it was going to be more expensive on top of more expensive on top of more expensive. And I had the opportunity in COVID. Another uncle of mine actually was Danny's cousin as well.
It's a big family.
Yeah, it's a very, very big family. Bill's
Do
house.
They need help selling or buying houses right now.
So he was building houses in Punta Gorda, Florida, which is like a great spot on the West Coast, and you know, about 20 deep over the last ever since Hurricane Charlie came in. He started to really kind of, you know, develop real estate, and went from, you know, $300,000 stuff all the way up to $600,000 now. And I was always like kind of able to, you know, do my refereeing. So that's another thing I do. I do a basketball refereeing. And when my seasons, in between my seasons, I'd have like a month window, and I'd go down and I'd rehab and I'd kind of recoup and get my world in order, get my spirits right. Because Florida has a great way of getting somebody's spirits.
Oh yeah. Right. The sunshine, the ocean, the fun.
Yeah, people are in a good mood almost all the time.
It's nice there.
Yeah. And listen, contrary to how it goes here with, you know, weather temperatures, and then, you know, the great, wonderful summer that everybody's had here.
It's been fun.
Yeah. So going down there and seeing that world, I realized too in the pandemic that they had a different way of looking at things. Okay. So, you know, Massachusetts being a Democratic state and Florida being a Republican state, they just went about things very differently.
Yeah.
And I preferred the way that Florida went about things, quite frankly, because I'm an independent, free-spirited person, want to kind of come and go as I please, right?
Love it. That's why we do
this. Yeah.
Part of it.
Right. So you know what? Because of the fact at that time I was working for, we hadn't opened yet, Dovetail, but we were working for a major national lender, and I was a branch manager / sales manager, and because of the fact that they were kind of forced to have everybody go home. I went home. I went home to want to go to Florida, right? So here I am, like hiding from all that and realizing very quickly that there's a better life down there. So what I ended up doing is I ended up putting my house on the market here and selling it, and then going to buy a little condo in Sarasota, which is about an hour north of.
Yeah, I lived in Fort Myers for a little bit.
Yeah,
for a hot minute.
Yeah, it's a really, really cool section. Like
Sarasota is really nice.
Yeah, and the East Coast.
I lived in Sarasota.
Yeah.
So.
Really?
That's where we went, right?
Nice.
No, I took you to Bradenton.
Oh yeah.
Which is like
they're all in the same little area.
So where I live is right near UTC, which is the Bradenton Sarasota line. So and they're doing that growth there is like phenomenal.
Oh, it's insane.
Right now. Yeah,
it's insane.
So you know what? When we started Dovetail, you know, we were probably in a 4% marketplace. So I went down there and started spreading my wings, introducing myself to every realtor.
Spreading wings.
Yeah. Appropriate. Yeah. So meeting realtors and things along those lines, it was really cool. But when the rate started really kind of kicking up, what I recognize is that I need to be more here, entrenched in my database, helping them lift their spirits. Because you know what? Right now, one of my biggest things that I do is I'm the ambassador of positivity to
you have to like be able to give that to each other now too, because it just gets heavy.
And we believe that we can. So, we're dictating our own success by number one, believing it's possible. Right. And I think that that's a missed cue in so much, like in the world that we're living in right now. There's so many people that actually are attaching themselves to the bad times. By what I see, Nicole, is that people are looking at loans saying, "Oh, I can't do that," and then I'll pick it up and be like, "It's closing."
So that's my favorite thing is to make something out of nothing.
Well, on top of that, I mean, you know what? I think what's happening though is I think that these loans are closable. I think
I know what you're saying.
Attaching themselves to the fact, times are tough right now. This person doesn't qualify.
Or I've had
it's a self-fulfilling process.
I've taken clients recently, more than one, that like. I'm not dogging on anyone else, but like a mortgage person looked at it, either didn't give them the right pre-approval or just told them kick rocks. And then exactly what you're saying, you dig deeper and you find a way. And that's the part I love. The project of it.
The advantage of having a lot of people right now is that, co-signing used to be like, oh, I don't want to ask anybody.
Oh,
now it's just
every single loan.
Yeah.
That's how I start every conversation. Before I pre-approve you, in the back of your mind, start thinking about if you have anybody in your life that you could add, just in case you're not approved for enough, because that's what's happening.
COVID started, people had money in suitcases that we never knew about, like just cash. Like you would never understand or know that some long lost aunt, cousin, brother, whatever, had the money to do it. So even, on my end, I'm like, okay, so who do you know that might be willing to do this with you, be a non-occupant, or might go on or move in, how can you get some roommates, those types of things, because it's just, you have to do what you have to do right now.
It takes what it takes. And that's really kind of one of the big things that we have, kind of a philosophy, is that, we have to be willing to do what others are unwilling to do. And I think that, because we're successful in that, we're meeting, when the rubber meets the road for us, is that's where our success points are coming from, is that the effort that we're putting in.
Right.
We're outworking everybody. And that is, not a, I'm not going to say that mortgage folks don't work hard, but I think that they've become incredibly spoiled over the past 3 years.
So have agents.
Yeah, I agree.
So have agents. I mean,
you see the social media thing with the girl that just buys a and she's like flipping hundreds. She's like, yeah, you guys are just like, this is annoying to me. Like she's buying a $200,000 car, and they see it today, sucking their thumb in the corner.
Exactly.
And there's some reality to that, because I know it's cliche, but I think the harder you work, the luckier you get, though.
Yeah, it's not about luck. It's just about the tenacity and kind of along with that positivity. The more negative you are, the more that compounds.
Yes.
Same thing with positivity, and same thing with the work ethic. The harder you work, especially when we're coming through these times of uncertainty, market shifts, disruptions, all of those things, the harder that you can just buckle down and get back to basics.
Yep.
A lot of people for many years, it just flooded to them, and you didn't have to really talk about database. You didn't have to build those relationships. It just came. And so now the people that know how to get back to those basics are the ones that are
we got a trick. We write personal notes.
Yeah.
Oh my God. Handwritten notes. We talked about
notes
this.
So
they're everything.
Impact.
Because they don't do them anymore.
And the other thing too is, I mean, you know what? They're not an disingenuous play. It's actually a very genuine play, right? So Why we're forcing our younger ages to do it is because there's two things that come in a personal note when you write it. It exudes confidence, competency, and character. And those are two decision-making, like neurons firing for a person that receives it. And of course, you know, we have it nice stock. It's good quality and almost feels like a wedding invitation. And, you know, some of the loan officers are saying, should I just mail it to the office? I'm like, absolutely. And they're like, but what if they don't go to the office? It sits there and everybody's like, what is that?
Yeah.
What is that? You know? And so
because
it's
someone from the office is going to call them and be like, hey,
you got this little envelope
in
there.
And it looks important.
Yeah, right.
Yeah. It looks important.
Exactly.
You know,
it's not cart sort mail.
No, it's not. I do that even with you know, if I'm out trying to prospect for sellers, I'll write a hand note, I'll leave it on their door, you know, different types of things, because it's different than what everyone else is doing, but also it's emotional too to the people that are receiving it, because they're not used to it, especially for the, you know, I think the younger generations that didn't grow up with it. Right. You know, it's
yeah, I think the biggest thing I learned too, like some of the attorneys that we work with, some of the people that I work with, I got taught by somebody who's very old school in the business, and it's door knocking, but like I do it in a creative way now. I'm bringing like pumpkins for Halloween, just like, and people, when you show up or you leave it for them, they are shocked. Like they are just like, I can't believe you did that. Like nobody does that anymore. And I'm like, that's the point.
People don't go a half a mile versus the extra mile.
I'll take a whole day and I will drive around for the whole day and just drop stuff off to clients everywhere, just everywhere.
It's the Buffini and Company style of doing business. I was coach. Okay, so Brian Buffini
I'll explain it to you.
Yeah, he's a real estate and lender kind of coach.
Okay,
and he was really the one that authored my you know, kind of subscription to the personal note.
Yep,
I took a lot of things from him. You know, the pop by gifts, which is kind of what
that's what it is. Yeah, that's how that's what I got taught.
You know what I mean?
That's how you do it.
Correct. And I think that at some point, anybody that's doing that probably had some Buffini and Company curriculum in their world. I was a Club Net member, which is like a, you know, high price coaching effort for probably about 4 or 5 years. And I will say that changed my life, because I was on a very bad trajectory back in 2002-3, because I had this big team of people, money was coming in and like in droves.
You get
and I lost myself in that window. Like, so there's a point I have to push through with this level of success too, is that I don't necessarily equate making a lot of money with success, because I've already made a lot of money. And I can tell you that Miami Heat, we spoke about it. I remember being down there for the 2006 NBA Finals, which is like the holy mecca of my world, right? And it was like they had the 3 games in the middle, so it was 2 away, 3 in the middle, and I stayed at the Shore Club for like 14 days, then $1,000 a night, and I was hanging around with all the Hulu, right? Never have been more spiritually bankrupt, and since that moment, that was when my personal life here was shifting with my son's mother and the family that we had
going through it
in Hanover, and I'm calling back, and you know, the glue that kept my son's mother and I together for a long time was my son. And I'm glad that, you know, we were able to see that as we were not helping each other grow, that we went into 2 different directions. I became a single dad, which was like probably the honor of my life, because my boy's, he's awesome. I think I had something to do with that.
Of course, take a little credit.
You know, again, it's, and I wasn't perfect. As a matter of fact, I think I overindulged because of the guilt of not having a mom around.
Yeah, we all
do.
We all have gone through
it out with him, you know, a little bit more. But I couldn't give him that maternal piece that he was looking for, even though I was striving for it. So, probably one of my bigger accomplishments was, you know, kind of raising him successfully. And I had a window, but that's where all my family kind of helped me a lot, because, you know, with the things that I was doing in the city at that particular time outside of the mortgage business, they were help getting my places set up for me, because they knew I had to get them on off the bus.
You got a good family.
Yeah, awesome family.
It's great to have the support.
For sure. And it's unconventional. A single dad is very unconventional, unless there's a tragedy of some sort, which this wasn't the case. I got to tell you, like, I'm so cool with his mom right now, because I just think that we just didn't, at that time of our lives, we were growing differently. And it was okay that, you know, we shifted gears. And I think it helped both of us really identify with who we were individually again. And I think that that's kind of important, because, you know what, life will throw you challenges. You really need to kind of embrace them and navigate through them. I think people just go hide in a corner. And I get so annoyed with those
But I
people.
like the corner sometimes.
I hear
As long
you,
as you
I
don't
hear
stay
you.
there.
Yeah,
You
well,
don't
yeah,
stay there. You
well,
can't
listen,
stay there.
you know
But
what?
We always say like I like when I'm going through it and say I'm depressed or whatever, I'm just having a day.
Yeah.
You get one day to wallow.
Yeah.
And the next day you get the F out of bed and you take a shower and you have to push through it.
You have to
push
live.
through it.
You have
You
to
get
live.
one day.
One of the kids that I knew that was a branch manager for me at that former company that I owned, he said this, and it was always so like hilarious to me. He goes, you know, we all have to like hang out in our underwear for 6 months and figure ourselves out. And I was just like, that is so bizarre, but appropriate, because you know what? If you don't give yourself that time to rebuild yourself, you're just kind of running around empty constantly.
And you have to fill your own cup before you can fill out.
Without a doubt. You know what? And that was a hard lesson for me to learn, because I was constantly filling everybody's cup.
I don't think we got raised that way.
I'm
like,
still filling other people's cups.
I'm like just learning that now. You know what I mean?
Well, so it's okay to do that, but I think what you have to do is you have to make sure that they're also participating in filling their own cup, because you can't work harder at filling somebody's cup
Exactly.
than they are. Yeah. So that's where the life coaching part of it. Yeah.
See, I filled your cup. I did it for you. I still learned how to do it for me. So on that note, though, we have to wrap up.
Oh, cool.
I know we could like literally sit here all day.
One question I have, because we're all coming to the end of a quarter and we're coming into the fourth quarter. So end of the year. Yay. I know for us, for real estate agents, November 15th is kind of our year end, because if we get to November 15th and we don't have deals, we're really not closing into 2024.
Right.
What are you looking forward to in the fourth quarter and kind of closing out the year?
So I think that this is a great time for the mortgage industry right now, while it's a little bit quieter, to continue to invest in yourself and deepen those relationships that you have, and then go find new relationships as well, because people aren't, right? And I think that what we're going to do, and what our focus is to get the 3 or 4 people that we just added this month kind of up to speed and comfortable, because I don't think that anything is expected of anybody in the fourth quarter. Now, the leadership, us, the mortgage guys that are in there and they're doing business, we're pushing. We want to run right to the tape till the New Year's Eve.
Oh, I want like 2 more. 3 more. Come on.
We believe that that is, it's sentimentality wise, the November 15th, you know, you're absolutely correct. But I also do think that's a sentiment. And I think that people might be able to go out in the middle of December and go buy a great house, because nobody's out buying a house.
Oh, yeah, people do it. I'm saying as far as like our, you know, getting our paychecks in for the end of the year. You know, people still buy. I love selling in the winter, because
we feel, and again, I don't want to be negative, because again, the ambassador of positivity, I can slant it by saying this. It's going to be a really, really rough stretch in the next quarter.
Yeah.
But I think that what that provides is a great opportunity to double down on what you're doing right, reevaluate what you could be doing better, and continue to kind of make strides and strive for the, you know, I don't want to say greatness, because it's kind of, it seems like so
we like the cliche though. We like it.
You know, but strive for that greatness that you have the ability to do, because I think it's a confidence building time. I think if we are getting our folks to be more confident in the next few months, then we've done our job.
Awesome. Craig, where can people find you? Your socials, whatever you want to give people in case they want to reach out.
So my social on Instagram, which is something that's becoming a little bit more comfortable for me in the last couple of years. On TikTok, I have 135 followers.
I only have 67.
Okay.
But I started after
Actually, I'm on 1 year anniversary of TikTok.
Ooh, congratulations.
So we're going to Vegas next week to the AIM Fuse Association for Independent Mortgage Experts.
Oh, cool.
Awesome.
And that's going to be super cool. And that's kind of when I started TikTok, because I figured, you know, I could start with Vegas and get some excitement pulling through.
I heard Vegas is shutting down pretty much. Like all the bartenders are going on strike or something.
Oh,
I heard I heard it on TikTok last night.
Yeah, not until
all right. So what is your TikTok? What is your Instagram?
So my Instagram handle is CraigG617.
Okay.
And you can find me on Facebook.
That area code.
Yeah, exactly. I represent it, as they say in the hood. And I'm Craig Good on easy to find on Facebook. And let's see, Dovetail Mortgage is in Braintree, Massachusetts. We're easy to Google. And when you do Google us, you'll find that we're pretty successful with our 5-star Google reviews.
All right. Craig, thanks so much for joining us today.
This has been awesome. Again, if we could.
Yeah, absolutely. Definitely.
Yeah. I mean, with the repeated visits, though, we might have to rename the thing. Good stuff. Thank you so much.
Thanks so much. That's all for us, guys. We'll see you next week.
Bye.